All right, everybody, a very good afternoon to all. It is 13th of October 2024 and is almost 1:30 p.m. So we're gonna go through some of the key points, some of the major US macro events we had in a past few weeks, or let's just say after the FOMC meeting we had on September 18th, 2024. It was a very widely expected, if I put it in a right way, that the Fed's gonna go 25 basis points of cut, but eventually they went for much higher than that. And as everyone was highly focused that because this is gonna be their first cut, as they start their cutting cycle. This was their first step to start cutting it, and they went for 50 basis point cut, which gave us some sort of a volatility over across the major asset classes. But after the SEP and Jerome Powell emphasizing that they're not in a rush to, or this is not a pace that they're going to be moving on to cut the interest rate. So, which kind of gave us a little bumpy in dollar index. So we will go through the bias, what bias we have right now if we look at the US dollar, what data we are focusing on that can shift the fundamentals of the dollar. And we will also go through some of the meetings we had, and what we can expect from the upcoming meetings from the FOMC, we can say Federal Reserve. So as you can see, we have a Federal Reserve press release that was released on September 18th, 2024. So before that, the cash rate was, I think, 5.5%, and they cut it by half a percentage, as stated in this statement. As you can look, the committee decided to lower the target range for the federal funds rate by half percent point, to 3 by 4 to 5%. So which means that from 5.5%, they went to the 5% as the official interest rate. So the key things we want to look at this statement was what changes have they made from the previous statement to the current statement. Uh, I have highlighted here over, as you can see, the first highlighted thing says that the job gains have slowed. The unemployment rate has moved up but remains low. Inflation has made further progress toward the committee's 2% objective but remains somewhat elevated. So, what they exactly trying to say that the job gains has slowed, but it's not falling off the cliff. The unemployment rate just went up, but as we know that 5% is what the Fed wants it to maintain the unemployment rate. So by moving it a little tick up to 4.4%, if I'm not wrong at that point, I think it was 4.4% or close to 4.3%. So it they said like we are not shocked with the numbers we had. It's up, but it remained low. uh, Looking at the inflation numbers, inflation, they said, has made further progress. What they mean by that is the inflation is heading to the right path. It is close to 2%, their target rate. And uh, and and uh, the committee, uh, 2% objective but remains somewhat elevated. So that what they're saying is that the goal they want the inflation to get to reach there are chances, that somewhat chances that it can bump higher from what it has been right now. But with that, I think the current inflation numbers, yesterday, or not yesterday, on Thursday we had, we will talk about it um, later on, but it's somewhat going in a right direction. So the committee has gained greater confidence that inflation is moving sustainably toward 2%. and judges that the risk to achieving its dual mandate. So what is dual mandate? It's their employment and their inflation goals are roughly in balance. So what they're trying to say that, hey, we did cut our 50 basis points, and we went we moved ahead, and we cut it by 50 basis point cut, but it doesn't mean that we are behind the curve. We want to keep ourselves ahead of the curve. To do that, we just went for 50 basis point cut, even though the balance between inflation and employment is balanced. So there is no point to get uh, to think that the Fed is behind the curves, and don't need to panic that we are trying or we see a recession ahead of us. No, there wasn't anything other than that which gave us the statement showing that they took this dovish stance. It was clearly a dovish stance, according to me, and the more dovishness get fueled up when we saw a summary of economic projections. Now, if we look at the median and central tendency and range, so across this table, what we want to focus on their projections on unemployment rate, on their PCE inflation, core PCE, and the major one is the federal fund rate. So, okay, that's my bad. So, this one is from the last projections, as you can see, June projections, and the current one we got in September. So the Fed releases every once a quarter there as projections about how they see that they're gonna go in the future. Maybe they can, as you can see in the June, they said they're gonna keep their policy restrictive close to 5.1%. They think that they're gonna go just for one cut. Okay, in June meeting they're saying they're going to go for one cut, 100 basis point cut before the end of 2025, and 200 basis point cut before the end of 2026. But in a September projections they said that, hey, we cut at 50 basis point cuts right now, and we can go two more 25 basis point cuts before the end of this year. Same story with the 2025. They didn't much change. It's still the 100 basis point of cut, but they moved it lower from 4.1 to 3.4%. It was a really a good dovish outcome which we got from this SCP projection. If we look at the unemployment rate, they said that it can go up. We believe that 4.4% is what we can see before the end of 2024, and it can stay there 2025. So currently, the unemployment rate is sitting at 4.1%, and the PCE inflation is sitting at 2.2%, and the core is at 2.6%. So when we look at this data, we say that, hey, the unemployment rate is in control. The PCE preferred gauge for Fed for the inflation is below what they think, 2.2%, and the core PCE inflation is at 2.6%, which is exactly what we have right now. So which give us a thought that there is no need for to rush, right? There is no need to go ahead and say that the Fed is behind the curve and they need to do more to just to be there where they don't call a recession in the US economy. So uh I think sometime market just mispriced, the store market just mispriced with that, and now currently it is after September 18th to today 13th of October. Pretty much we had really nice data out of the US, and we will talk about it after this. That how the dollar index went strong, and the panic selling the dollar from the markets went away with the data, because the jobs data, the labor market data stayed strong, and inflation is still under control. So there, it was a pretty much very cozy environment for the equities and for the dollar. So now let me get you to the okay. So September 18th, as you can see, we had a federal fund rate. We just talked about it. And as you can see, it's in red. So what does that mean? That means that the highest that the forecast was 5.25%. Majority of the economists, majority of from the market, they think that the Fed gonna go for 25 basis point of cut, but they eventually did 50 basis point cut, which left us with 5% Fed fund rate. So we had economic projection, that's what it is, SEP, and a statement we already talked about. Now let's move to the presser we had from Jerome Powell. I just have over here Powell question and answered. uh, so also the first thing he said, we concluded that 50 basis point cut was the right thing. And when you see that that he stayed neutral. He did not give anything useful to the markets to bet that what future can hold. Uh, okay, so let me just say a good place to start on what coming next is the S&P. And I think some of the okay, so there is nothing in the SCP that suggests the committee is in rush. So what does he trying to say? That the we are everything is under control, and if we went for the 50 basis point of cut, it doesn't mean that we're going to go for another 50 basis point cut and another 50 basis point of cut. So we can go quicker, we can go slower, pause if appropriate. So if it's just like saying that we can run faster and we can walk, or we can just sit down there. So it doesn't it just didn't give us any edge. So he said discussion was on 25 versus 50, and everyone agrees that 50 basis point cut is a right move. Overall, 19 Fed officials saw at least 50 basis points this year in the S&P, which means there are 100 basis point of cuts. 50 basis point, we are already done with that. 25 and 25 is in November 25 and December 25. So I think there was another comment. Okay, so I don't think anyone should look at this and say this is the new pace. So as I said earlier, and I will say it right now again, that he's really emphasizing on that if they went for 50 basis point cuts, it doesn't mean that they're gonna go 50 basis point a cut again, and this is not a new pace, this is not their new speed. So he said the time to support the labor market is when it's strong, and the US economy is in good place, and our decision today is designed to keep it there. Okay, so he stayed very much neutral, and you can see that how he played it. He went for 50 basis point cut. He reduced their projections uh, very much, and in the presser, he just said, "Hey guys, listen. You don't have to be very aggressive when we does these things. We know that we cut 50 basis point cut. We know that we gave a dovish SEP, but this is not a new pace. We are not in a rush, and we're gonna be a data dependent approach, and this is not something." Uh, they're going to do every time by going 50 basis point of cuts. So Powell repeatedly said or hinted that SEP pays two more or 25 basis point cuts is the base case and will adjust around that. There was some dollar buying when he said, I don't think anyone should look at this and say this is not an EPS. So you can get the point, right? So by giving a dovish stand, we probably have seen some weakness in the dollar. But with the pressure, he stayed neutral and tried to calm the markets. When the market just closed those positions, it just got into just after the FOMC statement. Now, let's go back and have a look what data we had after the FOMC, because the Federal Open Market Committee, they're just hugely data dependent. Okay, so the next day we had unemployment claims came much better than expected. Uh, Healthy U.S. Labor market. Okay, then we had a Fed FOMC Waller speaks and FOMC Harger speaks. So let me just bring those comments from uh, I think let me just to bring that up for you guys. Okay, right here. So Waller. So we haven't had any comments from the Waller right now, and we are still waiting. I think we haven't had any comments from the Waller after FOMC. Let me just see if we have some comments from Harker. Where are you, Harker? So no, we haven't had any comments from the Harker either. So with that, let's move to the Monday, 23rd of September. Manufacturing PMI, services PMIs, but we had services stayed pretty much good, 55.4, what we got on that day. Close to consensus, but not that bad. If we go to the timely chart here, so as we can see that the services stayed pretty much up. Uh, April 2024, we was at 51.4, and after that we just seeing an upward slope in it, which is eventually supporting the US economy. So manufacturing, we do know that it is sitting in a contractionary territory of 47, but as we broadly know that manufacturing doesn't much support the GDP of the US economy, it's the services sector. So services staying in a good position, manufacturing staying in a contractionary territory. It was a pretty much mixed bag, but overall, I think that the services with the services, it's pretty much nice to get the data. So pretty much mixed bag, but we have the data, right? So we know that the services inflation, the services PMI is in a good place. Uh, I don't know if we had any commentary from Goolsby. Let me just go there. Just give me a second, guys, and let me see that Goolsby, if we had Goolsby or not. Okay, so if I go back to 23rd, okay, so we do had his comments, remarks says that supporting for cuts, but as the Fed is already doing it, his comments fail to move a needle in the market. So let me just move this to the down. I think okay. So Goolsby, he's a dove. Okay, many additional rate cuts are likely needed over the next year. Rates need to be lowered significantly. Comfortable with 50 basis point cuts showed Fed is focused on risk around employment, not just inflation. Inflation is way down from peak. Labor market is in full employment, and to reach a soft landing, you can be behind the curve. Rate must come down significantly. Fed officials have this vision in their mind of executive of perfect soft landing. So pretty much dovish because he supported 50 basis point of cut at this meeting, and he wants some more cuts by the end of this year. This data we already have, so that's the reason why it failed to move the needle in the market. But as the Goolsby is a dove, so Dove is gonna be a Dove. So we already expect that he's gonna be dovish in his commentary. If he could have went hawkish, that could have led to us some buying in the dollar, but when Dove being Dove, then it just kill uh, our trades. We can't make any trades after his comments. So moving back uh, to the 24th of September, we haven't had much. Let's move forward. GDP. So okay, so GDP is at 3%. Okay, just keep in mind. Okay, let me just move back. Uh, let me just move back to. All right. So look at this. Change in real GDP 2%. Okay, and what we had here 3%. So what we get from this? We get it like that the GDP from US is strong, and the Fed think that the US economy will get slowed down and will reach to 12%, but it is currently at 3%. So which, and alongside with that, again we got unemployment claims, labor market staying strong, and with the GDP staying at 3%, way above what the Fed is thinking uh, after the 18th of September. So eventually with that, we saw some really nice moves. This is I have marked here FOMC day we had, and after that we saw some choppiness. And look at this, boom! We are seeing that market getting repriced. That there is no need for another 50 basis point cuts to get for the move. And with the data staying strong, just started people just the participants from across the markets uh, start buying the dollar as the US economy is just not deteriorating. So with that being said, we had September 26th. We didn't got any comments from the chair made no comments. So other than that, uh, PCE price index month on month 0.1%. Not something we want to talk all right now. So ISM manufacturing PMIs just stayed same as it was prior, 47.2, 47.2. So if we go to the timely graph and let's see what we have here. So uh, it's not that bad. I mean, it bounced from 46.4 to 47.7, and we may can see that the manufacturing started showing us a nice recovery after the 50 basis point cut. This is all we're gonna see after that, maybe next month. November. So job opening. Look at it. As we know that the Fed has hugely focused on dual mandates, inflation and labor, the job opening stated that came very nice numbers here we had, which eventually further fueled up that the US economy the labor market is still strong. Now ADP 143, again labor market staying strong, unemployment rate as expected, consensus. Okay, services PMIs 54.2, way better than what the market had thought. Look at the jobs data. I mean, it's a monstrous move. Look at the unemployment claims 4.1%, NFP 250k 4k, average earnings came 0.4%. And look at the Fed's look at this data. It went to 4.3%, but 4.2 and 4.1, nice tick to the downside. And if we go to the FOMC SCP projections, we can see that the Fed thinks that it's gonna go maybe 4.4%, but we are sitting at 4.1% right now. So it's stating that the US economy is not getting deteriorated. And with that being said, the stock markets, which one was focusing on getting the thinking that the Fed gonna go for another 100 basis point of cuts. Now they have priced in that with this data that the Fed, they don't have to go for 25 or 50 basis point cut. Sorry about that. They can just go for 25 basis point, points of cut. And I think I forgot that on September 30th we also had Fed Chair Powell speaks. And if I show you that what he said on that day, uh, let me just uh, right here. I think we had FOMC right here. Well, so he came out and he a broad hockey direction was seen in response to Fed Chair Powell's remarks. He noted how the Fed is not in a hurry to cut rates quickly. He just repeated and tried to calm the market by saying that the Fed is not in a hurry to cut rates quickly, adding it, if the economy evolves as expected, that would mean two more cuts this year for a total of 50 basis point cuts, implying 25 basis cuts in November and December is the base case. So we have the base case, right? 25 basis point cuts in November, 25 basis point cuts in December. Now the key point, the key data we're going to be looking for is that does the data allow them to go for another 25 basis point cuts? With the labor market staying strong, inflation heading down to their target 2%, I think going for 25 basis point is a pretty wise move. All right. So we know the Fed wants a 25, is on a path of 25 basis points of cut in November and in December. All right. So now let's move forward to what other data we had. I think that was the last data. Yeah. So that was the last data we had from was the ISM. Okay. No, labor data. So after that, let me just go and inflation figures. Okay. So these are the inflation figures we had, and you can see these green numbers. Don't get confused with that. Look at the CPI year of year. Okay, 2.5%. What was the prior? 2.4% came better than expected. But if you go to the timely graph here, look at this. The move is still to the downside, downward. Okay, and it's a new low in a timely graph. 2.7, 2.0, 2.5, and this one was 2.4 right here. So just keep your eye on here on this mark and you will see the numbers. So 2.9, 2.5 and 2.4 on October 24th. Okay, September, August 2.9. So if you can, if you think like a Fed and you see these numbers and you say that, hey, like perfect, right? Perfect, the numbers are going down and we are not in a rush, so it's just gives them a benchmark that the Fed is doing great and they don't have to get rushed. We had unemployment came worse than expected, but because of the hurricane situation going on in US, the widely expected that that's the reason why we got the unemployment claim much higher than anticipated. But after this data, we do saw some choppy price action across the major asset classes. So that was the reason, because we haven't had clear edge out of this event. But overall picture, if we look at the U.S. economy is doing pretty great with the growth staying strong, labor markets is staying strong, GDP strong, inflation going down, ISM service is great, right? interest rate heading down slowly, it's a perfect environment for equities. For if we just say like what thoughts we have on the dollar. So before this labor data we had on October 1st, the bias was pretty much clear that we want to go long because we understand that the market just overpricing that the Fed should go for another 50 basis points of cut. But we understand that the labor market is not falling off the cliff, and the Jerome Powell just confirmed that. So right now the bias is according to me, I think is pretty much data dependent. It solely depends that what we get from the U.S. economy, what data we get, and does that data the allows the Fed to go for 50 or for 25 basis point of cut. So with that being said, now let's just see what we're going to have in a week ahead from the out of from USA. Monday there's Thanksgiving, so nothing much there. Pie State, nothing. Core retails. So just look at just unemployment claims is what I'm gonna be focusing on. If it get worse than expected, that can fuel in some more cuts, higher cuts. But I mean, it's just gonna be a short-term trade. If we can't hold out of this data, it's not going to be a swing trade out of this, but we will see what we get from Thursday. Other than that, we're not having much from the US economies. These are some of the weeks then we don't get much of the data, but this is the time when we try to stay patient and wait for the data to give us a clear edge on uh, on which side the data going to uh, give us a direction. So let's see what the overall picture again says on trading economics. This is just like having a free refined TV, so we can have some major historical data out of the major economies. Looking at the US economy, as I said, GDP 3%, interest rate 5%, inflation 2.4, unemployment rate 4.1. All of these major data out of the US stating that the US is doing much greater and better than other economies. Now, with that being said, with the hawkish statement we had the Powell, with the recent commentary from the Fed speakers, with the data we have, I think it is time just for us to stay patient and wait for the data, what it has to say, and with that, I think we have reached to the end of our video, and I think that my overall bias is right now is pretty much neutral. uh, I don't see a reason that I can say that I want to be hawkish because the market is already pricing in exactly what the Fed wants. So my bias is neutral on it, and Fed will cut 25 basis point cuts. It is widely expected right now. I think with I think 84 or 90% chances that they're gonna go for. Let me just show you. I think if we go to CME, Fed watch tool here. Let me just open up. Okay. Okay. So okay. 89% chances that Fed will go 25 basis point of cut on the next meeting, as you can see. So pretty much in line with the FOMC projection. So as I said, the bias is neutral for me right now. I don't want to rush it, and we will see what data give us any opportunity. And this is the end of this video. And if you have any questions, don't hesitate to let me know.